Good morning, everyone. I'm just going to wait a couple of minutes just to let everyone get settled and be led into the room, and then we'll start off the shareholder briefing very shortly. Okay, good morning, everyone. Thank you for tuning in for this webinar. This is a shareholder briefing to provide everyone with an update with what has been happening and what is going to shortly very kick off with our activity in the Cabora Bassa Project with both Mukuyu 2, some 3D seismic, and also some further exploration, and also all the planning that's been going on in the background. There has been an opportunity for our shareholders to provide questions. I haven't got them written down, but they're all going to be addressed through this briefing. So just want to recap quickly on where the company sits from to remind everyone, and for those who are new to the Invictus story, we have a basin master position in the Cabora Bassa Basin in the north of Zimbabwe, consisting of Special Grant 4571, which is this polygon here, and EPOs 1848 and 1849. We have got a very big portfolio of conventional acreage in the Cabora Bassa Basin. We're 80% operator, and we have a very good local partner in the form of One Gas, and soon to be joined by a partner from the Sovereign Wealth Fund of Zimbabwe, now known as the Matapa Investment Fund. So with SG 4571, which is where the majority of our activity has been focused today, we have the Mukuyu gas field, which was discovered following the successful Mukuyu 2 well, where we delivered 2 discoveries from the upper and the lower Angwa reservoirs, and also the Mukuyu 1 well, which was drilled in late 2022, which has also discovered gas in the upper Angwa. The lower Angwa wasn't penetrated. We have recently concluded some additional seismic in the eastern part of the license area, which is mainly in EPOs 1848. And we have a number of very, very good looking prospects now that we've matured from that work, and we released some of those results a few weeks ago. Very exciting looking prospects, amplitude support with them, and looking forward to getting the bit spinning in some of those. We've also got the basin margin play as well in the south here, which is more akin to your East African rift system, more liquid prone. And we're starting to get some geochem data back from the Mukuyu 2 results, which are supporting that strong liquid story in this basin margin area. So this is our acreage portfolio at the moment, an amazing portfolio to have as a very small junior company, and something that we've matured from scratch, all organically, and is a very, very exciting position to be in. So with that being said, we'll move on to the shareholder briefing summary. So from an asset point of view and where the company is, we've never been in better shape. And this is in spite of what we might infer from the share price performance. Obviously been disappointing given what we have achieved as a company over the last couple of years with the Mukuyu 2 well, the Mukuyu 1 well before that, and all the seismic data that we've used to mature that and identify all of these exciting opportunities. Although post Mukuyu 2 and completion of the drilling, which happened at the back end of last year, it's been a relatively quiet period in terms of news flow from the company. We have delivered quite a number of key milestones to advance the project, but it hasn't been a lot of activity in the field, which is what everyone I know enjoys seeing. We enjoy doing it, but I think that's what gets the market excited. However, there has been a huge amount of activity going on in the background, which is going to become market facing very shortly. So it takes quite a long time for us to get everything set, but once we do, we get after it very quickly. So there is a lot of planning involved. There is a lot of work to be done in the lead up to any of these campaigns, particularly because we are are very remote, and it does require a lot more effort and logistics and mobilization planning than other companies typically face in other areas. We are very frontier here. So I just want to recap Mukuyu 2 and what has been going on for this first half of the year. So firstly, in the lead up to Mukuyu 2, we outlined the objectives of what we wanted to achieve from the drilling campaign. We exceeded those objectives with the delivery of 2 discoveries in the Upper Angwa and the Lower Angwa as well, which we hadn't penetrated before. Absolutely phenomenal achievement that has been made by the team, by the company, and all of our partners, because to go into a basin that hasn't been drilled before and deliver 2 discoveries from the first 2 wells is a very, very rare thing indeed. So we had some challenges, no doubt, with Mukuyu 2. That's part and parcel of drilling in frontier basins, but we met our objectives in the end and exceeded them. And from that, we believe that we were going to get a big re-rate in the market. With Mukuyu 2, we've had some criticism of the sidetrack and why it needed to be undertaken and why we did it. We wanted to prove a discovery by getting fluid samples to surface, which we did. And I think if you look at the reasons for why we sidetracked it, was because we had overpressured gas in the Lower Angwa, a formation that had never been penetrated before, wasn't penetrated in Mukuyu 1, and we needed to wait up the mud to control the gas and keep the well in a safe state. And that caused us evaluation difficulties in the Upper Angwa and being able to retrieve fluid samples from there in the main bore. So we sidetracked that and executed it very well, and I'll take you through in the next slide once we've gone through the briefing on our drilling performance and how we're going to address this in the future as well. We've been doing a lot of work in that, and to give people, I think, some context on how well we've done in a frontier basin compared to what others have faced. Again, going back to other operators and other basins, we've had it in the Perth Basin with a lot of companies having to sidetrack, and this is a basin that's got dozens and dozens of penetrations in it, a lot of history, a lot of knowledge, whereas this is the first time it's ever been done in the Cabora Bassa by us. We executed that first 3,400 meters perfectly with Mukuyu 1, learnings that we applied to Mukuyu 2, and then when we got into the Lower Angwa with overpressured gas, we had to take remedial action to control it. So it's not unusual, but the team adapted very well and we got it done. So following that and following the success of Mukuyu 2, we set out to raise some additional funds to undertake our exploration and appraisal program. And having delivered everything that we said we would in Mukuyu 2, we had the support from institutional shareholders who supported our fundraise at the back end of last year. The timing wasn't ideal. That's just where we ended up from a timing perspective, being very close to Christmas. But we also offered our remaining shareholders, the retail shareholders who don't get access to these opportunities, the ability to participate through a rights issue on the very same terms. We've often been criticized for not allowing retail to participate, and we allowed them the same terms as this time. And unfortunately, it wasn't supported. So we went through with the rights issue and knew that it was unlikely to be well supported given where the share price had been at the time, but we had committed to doing it and we went through with it. So on that basis, given the rights issue wasn't filled, we have then had to, rather than being ultra aggressive in our timing of what we wanted to do and what we had set out to do was 3D and a well test for Mukuyu 2, we had to really ensure that we were getting the best bang for our buck in terms of value and how we were spending the funds that we had raised. So that has required some additional work from ensuring that we are making the wells as affordable as possible and also the seismic as affordable as possible. And we've really taken a knife to a lot of what we're able to do what we're able to get out of future drilling and also the seismic. So the seismic work we've been doing in conjunction with the main contractor, which has their equipment stored at at our support base down in the valley, and we have shaved quite a big price off the seismic. That's ready to go. Contracts are in its final stages now, ready for sign off. On the drilling side of things, we have really done a huge amount of work from what our future drilling campaigns are going to look like, and that has been a lot through the well services contract. So we demobilized all of the service providers kit, and that has allowed us to reset the service contracts in the future. For the first two wells, we were in a very poor negotiating position because we were doing single well campaigns, and in a frontier basin where none of these service companies have ever been before, we were dealing with the big service companies, the big ones that everyone's heard of, the likes of Baker Hughes, Halliburton, and SLB or Schlumberger. And they're very difficult companies. They're big and cumbersome. They have their own standards that they've got to meet. And so for us, they were very inflexible, but we didn't have much of a choice. So we had to be kind of contract takers, not contract makers. Now that there is long-term work in the basin, everyone has come to the party, and we've now had very, very good bidding from all of them, which has shaved a huge amount of cost off the wells. Coupled with that, our experience from the mobilization and the logistics part of the campaigns has been honed, and now we're in a far better position in understanding what we need to plan for in the lead up and the mobilization and staging of equipment. So our drilling campaigns are going to be much more efficient, much cheaper, and we believe we're going to be able to drill these wells at a cost reduction of 40%. So that's an enormous saving, and the time that we've taken over the last few months to renegotiate all these contracts and do all of the well design work has been well worth it. In conjunction with that, we've been undertaking the well test design work. So that has been done by external parties, and again has required some calibration with the core and fluids data, which we've now started to receive back. I'm sure a lot of our shareholders are shareholders of other oil and gas companies. There's been a number of companies undertaking well tests this year, and not all of them have gone to plan. So very important from our perspective, given that we are remote, that we get the planning right and follow the 5 Ps, ensuring that we deliver the best test outcome that we can. Because we've got multiple zones, there are a number of ways to test it, and we've got to evaluate each of those zones, particularly if we're going to commingle them, and also with a view that they're going to be used potentially in the Eureka gas to power pilot project that we signed with Himwensa and Delagio a couple of months ago. So that well test design also requires the equipment that you're going to need in terms of long leads, explosives, tubulars, and everything else. So ensuring that we have got that test design right, and then the equipment that we're going to require for it, ensuring that we get the best price for it, has also been going on in the background. So that test design work is nearly done, along with the well services contracting as well. So we've been setting everything up so that we can get after our activity very quickly. I know it's not great from a market-facing perspective in terms of news, but it is very necessary for us to deliver this with the best value possible for our shareholders. So we have been doing all of this in the background, and it has been a very productive period from ensuring that our future campaigns are as efficient as possible. So in spite of what many people may tell you on the message boards and the forums, this is very difficult. It's and however well-meaning they are or however misguided they are, no one else has ever done this, but we have a very good team, and the guys are working very, very hard to deliver for all of our shareholders. So I think particularly for us, being where we are in terms of our location, very remote, but it is very busy in our region with all of the activity going on in Namibia. And so we have been competing against all of these other companies who are also scrambling for the same equipment. So test equipment is hard to come by because it's being used offshore in Namibia, as well as onshore in the Niger Delta and Angola at the moment. But we are in the process of finalizing, securing those services, and then we can start to mobilize for our campaign. And again, mobilizing things is not quick and not cheap, because they do require some decent lead times, and we've got to make sure that everything arrives there all at once. So with that being said, what we've also been looking at from a corporate perspective, and this is going on to some additional questions, and I think some of the other key ones that our shareholders have wanted to ask some detail on is the PPSA, which is a key agreement for us. Now, the history of the production sharing agreement, I think is relatively well known, but I'll just recap that for those who are just tuning in. The PPSA is the Petroleum Production Sharing Agreement, and this is the final piece of legislation that is not required but desired by the company to provide us with a long-term, stable legal and fiscal framework to govern the project for the next few decades. Now, the PPSA has been in progress for a long time, and that I think everyone is aware of that. It's a very key agreement. Typically, these are signed ahead of when you begin to explore. However, we have all the legislation in place already in Zimbabwe because it is operated under a royalty tax regime, which is the Mines and Minerals Act. So the PPSA had been introduced to provide the country with its fair share of her resources. Zimbabwe currently has the best fiscal regime for oil and gas in the world, which is just a 2% royalty on gas and corporate tax. That is not a fair split of the proceeds by any stretch of the imagination. And we sought to introduce the PPSA to fulfill a few objectives. And primarily, it's about being able to provide the country with a fair share of her resources. But the manner in which you do that, not simply through just royalty and tax, but through a production sharing agreement, which allows the country and its citizens to benefit from not only the profits, but also the product, to provide subsidized power, subsidized petrol, whatever the government, who will be our partner through the Mutapa Investment Fund, formerly known as the Zimbabwe Sovereign Wealth Fund, is able to allocate with their share. So that fulfills several desires and wills of the government through providing them with essentially a portion of the product to do and provide for the citizens what companies can't do from providing subsidized product. So it allows government to do that and keeps us with the ability to provide a commercial rate of return for our part of the investment. So this is done for several reasons, but also coupled in with that are some of some additional key fiscal and non-fiscal provisions that the company will be able to derive from the PPSA, and that is essential to ensure that we get the future funding from for the full field development part of the program. So when we're getting into the big spending and into the production phase. And that will provide our lenders with the comfort that the rules aren't going to change, and this is a long-term investment that will enable them to foresee, again, us being able to meet a specific hurdle rate and rate of return, and that the risks are suitably addressed through this. At the moment, there are a number of companies in Zimbabwe operating in the sector, coal bed methane though, who already have a production license and are operating there. We have no issue and no hurdles in our way from doing that. However, given it's conventional, this is and it's happened all over the world, where ultimately the country needs to derive its fair share, and the fiscal terms at the moment don't reflect that. So what has been proposed are fiscal terms that are commensurate with the rest of the region, countries like Namibia and South Africa, who are at similar stages, but are still very attractive from an overall global fiscal perspective and in the top quartile in terms of fiscal attractiveness. And this is from an investor point of view of what is able to be of what a total government take would look like. So you can look up Namibia and South Africa to get an idea of the kind of fiscal boundaries that we're talking about. Now, in terms of its progress, the fiscal terms have been agreed. There's some minor implementation things to be had with that are going on at the moment, and we've got the Matapa Investment Fund who are spearheading now the progress of the PPSA. The reason that it has taken longer than we had hoped is because the Matapa Investment Fund hasn't been capacitated until very recently. So it didn't have a board and it didn't have an executive. That has now been filled with the former Reserve Bank governor taking over as CEO of MIF as of early May. He's been in the chair, and our team had a meeting with him within his first week that he sat there. And since then, the Africa Legal Service Fund, who Zimbabwe are using to vet and just review the agreement, along with some external UK counsel, all met with our team in Zimbabwe. So they've been summoned to come and meet and finalize the PPSA. So that is making good progress. I know that we can't give a definitive date to everyone because we don't want anyone trading on that information, because it is going to be a huge milestone for us. But it is rapidly progressing, and it has the attention now that the MIF have been properly capacitated. They will be our future partners in the license. So if you recall from the EPOs that we have brought into the license area, the Matapa Investment Fund will have a 10% back-in right and take up government's share of the production sharing agreement as well. So they have a vested interest in completing this, and they have been given the task of implementing it as quickly as possible. We've had further dialogue over the last few days with wrapping this up, and we're expecting it to be delivered very shortly. So I hope that provides some context for all of our shareholders. I think we have also faced similar angst from our shareholders in with previous government agreements, whether it's been the PEDPA, whether it's been the renewal of our exploration licenses, and the award of that additional acreage. We all faced the questions of, is it going to happen? Our government going to deliver? And it always has been delivered, and we've always delivered what we've promised our shareholders. So this is going to happen. The timing is going to be very soon, but I can't give exact guidance. So onto the funding side of things, there is huge institutional interest from Zimbabwe. As we said in our shareholder briefing, in one of our shareholder updates and ASX releases, this is being led by Mangwana Capital, and again, that is very nearly complete. I think the outcome from this process, if you go back to when we brought Mangwana onto the register first in 2020, is going to be a similar catalyst for us. And if you look at what was delivered shortly after that, and the kind of share price performance once that happened, that gave everyone the confidence, I think we're heading into a very similar period from that. So we're excited to be completing this with Mangwana and some of the key institutions that they are bringing in board. And I think that's going to be a transformational transaction for us, and will provide everyone, I think, the comfort that all of the partners and government are very aligned in this project and where this is heading. So that also leads on to the partnering side of things. So again, with stepping back to where we were end of Mukuyu 2, once we had delivered the results that we promised, we and not only us, but all of our key advisors, brokers, and large shareholders were of the opinion that we would be given the license by our shareholders to go and continue to self-fund another portion of this project in the next phase of the appraisal and exploration. And in the background, we would be able to undertake the partnering process, which would be done without any pressure, and with us, again, getting on with our planned exploration and appraisal program. With the rights issue, it became abundantly clear that we now needed to, in terms of future funding, bring that in through a partner. And so we have accelerated that partnering process, and we were planning to do it during this course of the year, but we brought it forward, and the technical team has been very hard at work on prepping data rooms and getting material ready and getting people through there. So the farm out is advancing very well. We have interest from not only traditional E&P companies, but also service companies and the regional banks. Now, traditional farm out, you bring in another oil and gas company to help complement your skill set and bring additional skills. For us, that would be in the development side of things. We still need to, although everyone in the company has that experience from their previous history, Invictus itself doesn't have a track record as a developer and as a producer. So supplementing that with another company makes sense for us at this stage. But we also, for this next phase of the project, have a lot of appraisal and exploration ahead of us, given our very large portfolio. And our major cost component of that is the well services. Now, because there is long-term future work in the basin, service companies are interested in partnering us because they see, and our big equity in the license, we have the ability to service that through providing, again, equity to service companies in the license, or providing them with a future share of production in order to pay for the services. So those are kind of hybrid ways that we can also bring in funding for the major components of an exploration and appraisal campaign, as well as continuing to hold a significant amount of equity. So, and then again, with the regional banks, part of what we've done with this early pilot scheme to get them involved to fund a very modest development for us with this pilot scheme, because the major cost of that comes from the wells. We need very little in the way of processing equipment because of the high quality of the gas that we have. So that and the nature of and maybe I'll kind of come to this second, but there is a large amount of capital from the regional banks available for Southern Africa gas projects. They see the strategic value of it. The energy crisis that is being faced in the region is acute, and they see a huge commercial opportunity and are supporting a number of companies. If you look at Connecticut, if you look at Renogen, there are a number of these types of projects in progress and being supported by the regional banks. So we have a lot of flexibility in how we're able to fund our future portion of these programs through the exploration, appraisal, and development. I think a lot of that is going to be played out very soon, again, as we're advancing with a number of parties on the farm out. So stay tuned. That news should be progressing very, very soon as well. So we have been hard at work in the background, not with field activity, but setting us up for a very, very big back half of this year, and then also over the next 18 months. With the farm out, what we're trying to achieve is to ensure that the next 18 months, 2 years worth of work program is funded. So that means that we won't be relying on the capital markets to source any more funding. There won't be any more dilutionary activity, and it also takes the pressure off from constantly having to come to the market and also having to rush programs and keep everyone entertained with activity, because we'll be able to lay out a multi-well campaign which will keep us very busy and also provide us with a lot of cost synergies and savings, and keep a constant rate of activity rather than this kind of very stop-start activity that we've had over the last couple of years. Okay, on the technical focus side of things, what we have been doing is really on two fronts, and the way that we view our portfolio at the moment. We have Mukuyu and we have everything else. So firstly, on understanding and quantifying Mukuyu, on the well test, as I mentioned, we've had some external studies through parties that have been undertaken. So these are multiple parties to do these well test design works, and also calibration against core and fluids. So that has been progressing well. We've narrowed it down now because we have a number of zones, focusing on a handful of them that we think will provide us with our best source of information and test. Because we've got multiple zones, we have to really focus on those that we think are going to be more suitable for the longer term for something like Eureka with the gas to power project, because that is going to be a multi-year pilot project, and ensuring that we have minimal need for any well intervention work that you get with complications of having multiple zones. So again, take a philosophy of measure twice, cut once, before we mobilize any equipment. So that is now nearing completion, and we should be able to provide some updates once that work is completed. On 3D seismic, we see that commencing once we have concluded the contracting negotiations. All the equipment's there, it's ready to go, and it can happen very, very quickly. And that 3D seismic really is around delineating the Mukuyu field architecture so that we can high grade areas to target our future appraisal wells and also development wells. We want to focus in Mukuyu, an enormous structure, over 200 square kilometers. And we don't want to take a big company approach of going and poking a hole in every single fault block. We want to use the seismic to high grade those fault blocks that we think are going to be best suited for an early field development and full field development we're talking about. So that will allow us to focus on some of those fault blocks that we think are worthwhile and we can target for a fast track future field development. So additional appraisal drilling, we're looking at locations for Mukuyu 3 as well as Mukuyu 4 and beyond that. On the resource estimate side, again, that work is being progressed now that we're starting to get core results back from Mukuyu 2, as well as integrating that with calibrated logs now that we have some core results back. And again, we've had some external parties doing this work and to provide a net pay update. So again, all work in progress, but we do need the data in place before we don't want to be putting out refined updates all the time. So we put some preliminary updates from the well of what we had best information at the time. Once we've completed the studies work, we'll provide a future update. And then on unlocking the value from the remainder of our exploration acreage, and we have a new play now that's emerged in the eastern margin in the Dandy, which looks very exciting. Amplitude supported prospects and could be one big superstructure as well. We've treated it conservatively for the moment. I'll go through that in a second. But we've now got 3 play types that we have within our acreage, which provides us a lot of diversity. And again, we've had a lot of de-risking from Mukuyu that we are now applying to the other plays as well. As I hinted on earlier in the briefing, we've now got some geochem data back. And again, we're working this up, and this is still very early days, which indicates a very much an additional source, but a lot younger, Cretaceous in age, which ties in with our hypothesis of the basin margin play and in the Dandy, where we have an additional source in there that's more liquid prone. So this was seen in the liquid samples that we got from, or the liquid dropout that we got from the Mukuyu gas samples. Unfortunately, Mukuyu 1 would have been a better calibration because it's closer to the basin margin area, but I think we all know that the history of the area, why we couldn't get samples from that. So again, this is what we have hypothesized from a geological perspective with Mukuyu played out, what we hypothesized in the basin margin play, being more liquids prone. We're now starting to get some hard evidence that supports that. And then in the eastern margin, where we've got these amplitude supported prospects now, and a story that's really firming up well, and the source and the migration story on that is again very exciting. So the technical team have done a great job unlocking a brand new basin. Again, this doesn't happen very often, so it's a very exciting place to be. And then from the early monetization, so this should have been more left indented from a technical focus point, but we're also focused on the early monetization side of things and I think we've demonstrated through our presentations and gas sale MOUs that we've got with Mbuyu and Sable, and the regional gas market education that we've provided. I think we've demonstrated that there's a very large gas market for us, and we can monetize any volume of gas that we find. But for a lot of our shareholders and for for where we sat post Mukuyu 2 to where a full field development would be, that was a very long gestation period. And we looked at a number of pilot schemes, and we hinted at this beforehand, but again, post Mukuyu 2, we've got the results now. And what's very pleasing is that because of the low impurity of the gas that we have, means that the surface infrastructure that's required to deliver these early pilot schemes is very minimal. So for us, the major cost of it is the wells, bringing in Himoitsa, who provide diesel backup generation power for Delagio at Eureka. They also build gas engine generators, and they'll be simply swapping out the diesel for the gas, and we'll be providing them with gas. So the arrangement is we will sell gas to Himoitsa, who will then generate power and provide it to Eureka. So we're not taking on that role of the midstream infrastructure and having to build all of that out. That's already in place through Himoitsa and through the grid, and that will allow us a very low cost pilot scheme that we can use to demonstrate the proof of concept that we'll be able to then scale up for the full field development. So the aim of it is to show that we can produce gas, we can get the approvals to produce it and turn it into a product, whether it's in the form of electricity or molecules, deliver it to a customer, and then get paid. And then from there, we are simply scaling up what we'll be doing in the full field development. And that gives your comfort to your lenders that you can advance through all of those key provisions and particularly the approvals side of things, and gives them comfort that they can provide you with serious funding for the full field development, that they are going to make their return, and that all of those approvals are in place, and it's, you're simply just drilling more wells and adding more processing infrastructure, whilst the midstream infrastructure is being built out to support a big gas to power development, and also with pipe gas into the interior and into industrial customers. So I think that's a very elegant solution for us. The pilot scheme will also help us gather long-term reservoir performance data, which will again help us with our planning for the full field development, and in terms of our number of wells we're going to need, our drainage radius for those wells, and again give us better information on how we complete them, and also give us a head start in the approvals process. So a very elegant scheme. With Himoitsa though, Eureka is the first step. We've got the ability to expand that up to 50 megawatts, which is the ceiling for that kind of size of what they have, and then that ties well into what Mbuyu are looking to do with 50 megawatts and beyond. So we can provide almost single well economics for our future appraisal wells that will allow us to tie into the grid, produce from our and undertake extended well tests, which gives us that long-term information. So very, very elegant scheme, which allows us to gather that data, not flare gas, but actually get paid for producing it. So that's again the feasibility work. All of that has been going on in preparation for a very, very busy second half and first half of next year and beyond. In terms of our future campaign and planning and readiness, we've been through a lot of this, but the well contract services resets are nearly done. These contracts do take a long time to put in place with these big service companies. We've updated the well design, and I'll show you some of the performance in a second. And overall, we're going to deliver a 40% cost in our future drilling, which is an enormous achievement this early on in a basin's history. So what I'm showing you here on the left-hand side is a chart of depth versus days. We have Mukuyu 2 in red, in the solid red line, and Mukuyu 1 in this dotted black line. We've benchmarked it against similar wells that have taken place or been drilled in Tanzania, Kenya, and Ethiopia. And I think and again, this is going to some of the criticism that we faced from some quarters, and a lot of it is misinformed because no one's ever done this before. But what we have achieved in the first two wells has been extraordinary, but it's going to get better. and just to show you how well we've done and how much we've learned from the first well to the second well, and will be applied to the future wells. So with a lot of the challenges, we've got remote logistics, equipment mobilized from multiple locations. I mentioned the cost control element that we had with the first two contracts not being in our favor. For contingency, when we get to sidetracks, we can't plan for everything, and it's not cost effective to carry every single contingency under the sun. We had overpressure in the lower angler, which we hadn't encountered before, and that led to a stuck wireline cable in the main bore. So, and drilling induced fractures with the motor performance. Again, we had much better performance in the sidetrack when we didn't use motors. So we've learned again a lot of how we need to drill these wells in the future to minimize our challenges in future wells. So if you look at this table down here is a summary of all these other exploration wells that have taken place. And if you look at the final column here, if we do it in a kind of ordinary industry method, which is days to 1,000 meters, we have Ethiopia, Kenya, and Tanzania taking between kind of 16 and 20 days. Mukuyu 1, we drilled at 14 days per 1,000 meters, and Mukuyu 2, we drilled at just under 10, and we think we're going to get that down even further. We were well ahead of budget and well ahead of schedule in Mukuyu 2 until we got into this section of the well. So we executed the first 3,400 meters flawlessly, and only when we got into the overpressure in the lower angler did we start to encounter some challenges. So this was the wireline program where we were attempting to do it on wireline and then also running it on cable, and then we sidetracked back and drilled this in rotary without mud motors and did a much better job. This was the what we call the chicken run, where we got the first set of samples. Once we've gone through those upper angler reservoirs, and then we fulfilled the last part of the evaluation through here with our wireline. So bringing this all forward, we think we can drill these wells in well less than 35 days in the future for a Mukuyu type well. With the basin margin and eastern margin prospects, these are sub 1,500 meter wells, and we think they're going to be in the realms of probably 14 days to TD, excluding evaluation then obviously. So much quicker, much cheaper. We've learned a huge amount, and with a refreshed well design, we're going to be delivering much better improvements. So this is in stark contrast to, I think, what other operators have done in the region, and these are basins that again have been explored and drilled before. So we've done a tremendous job with these first two wells, but we are going to get better. Just touching on the CB23 survey results, and that has come in from over the last few months. We've been maturing this, and we have identified a number of drilling candidates. So Musuma, Mopani, and Mororo. Mororo is a new one that's popped up as a result of this new survey that we've got now coverage over with this infill, and this could potentially be one part of one superstructure. And you can see that dotted outline through here, where potentially we have that filter split. If you recall the Macabel prospect that was on this line, we do see some. We're doing some additional work with that, but we do see that beautiful flat spot through here, which lines up with these and would explain that big amplitude support. So again, exciting that we have these amplitude supported prospects. We have this up dip brightening that we see, which shuts off against the fault, and then this flat spot that we see across these faults through here. So very exciting. We're going to be picking a drilling location to test this eastern play, as well as a basin margin play as well. So Mimosa is one of those basin margin prospects, and again, we're evaluating all of these basin margin prospects again in hindsight, with now some additional data behind us from Mukuyu to pick. We do have a drill pad that's ready at Baobab, which is this westernmost prospect on the basin margin, but we're going to be evaluating everything else to pick again the best, what we believe will be the best prospect to test the basin margin play. So exciting from that point of view. Again, we've touched on all of this, and what I've gone through in the shareholder briefing today is really just fleshing out what was in the previous presentation that was released at the Africa Energy Summit last month. And I think the final thing that I'll touch on will be the recapping the funding. So again, Farm Out, which is our traditional upstream partner, which is advancing very well, and we're expecting offers very shortly. Strategic partners, where we've got some of the local investment from that's being spearheaded by Mangwana, as well as some of the regional banks. We've got downstream customers like Sable and Mbuyu, and also a huge scramble for molecules from potential customers in Zimbabwe. There is a number who have approached us off the back of some of these, who are looking to secure preferential feedstock, and it is an arms race now to secure energy within the region. And then also service companies. So we're advancing all of those at the moment, and we'll be providing our shareholders with an update very shortly on when this all concludes. We've got a plan to take this from where we currently sit now at the appraisal and exploration stage, all the way through to development, and a multi-phase approach that we're going to be applying to this development. I think one of the great things about where we sit is that we can tailor the development to what the resource size is, because the demand is there. So we're not having to reach a particular threshold. We believe we're above that already for development, but we don't have to go and drill out the entire basin before we can satisfy our lenders that there's enough of a resource there to develop. There's a big market, and there's a small market, and there's everything in between, which we can satisfy and produce a very, very nice commercial return for our shareholders. We talked about the pilot phase. Again, this will be a very elegant scheme that we're able to deliver, which provides proof of concept, allowing us to scale up for our full field development plan with gas to power with Mbuyu, and also will provide our lenders with comfort with this future development, that we can get all the approvals, produce gas, and get it to our customers and get paid. So with Mbuyu, we're advancing those studies in conjunction with Himoitsa and Eureka. There are a lot of synergies between this, and everyone's collaborating because they see the strategic importance. And then finally, with Sable, there was some press the other day with Sable and their plans, and very grateful for their support that they have provided us this far with Shingai Mutasa, their major shareholder, and we've had some key meetings with their team as well to progress their plans. They're backed by some of the regional development banks, because fertilizer is a key agricultural input, and Zimbabwe is a very agriculturally dominant country. And again, these are these perfect projects that the regional development banks like to fund, because of the symbiotic relationship between agriculture, GDP, and also the development of countries. So all of this is going to tie in very, very well for our future field development plan. So there are, I think I've addressed a lot of the questions that have come through over the last few days from through Spoke from our shareholders. Again, I'm always happy to engage with our shareholders who want more information. I'll never divulge anything that hasn't been put in the market, and there are some things I can and cannot say, but we have, I think, provided a bit more context in what has been doing, where we currently are with a number of these key strategic investors, partners, and also the PPSA that is being wrapped up, where that sits in conjunction with the field activity that we're going to be kicking off very shortly. So it has been a busy period. Just because there's not a lot of field activity and a lot of market-facing news doesn't mean that nothing's happening. As I said, I think we're on the verge of a pretty significant inflection in where we are at the moment. If you go back to that kind of April 2020 phase when we introduced Mangwana and what we were able to unlock subsequent to that with field activity, with agreements and approvals, and bringing in strategic investors. We see a similar juncture at this point, and a big period of activity for us, and that's going to be unlocked by delivering some of these, and we always have delivered. I think that's the key message, is that yes, some of these things haven't happened as fast as we would like, but if you look at our track record and what we tell our shareholders we're going to do and what we achieve and beyond, I think we've got a fantastic record, and that can be relied upon. And I think government has also demonstrated that they are delivering on agreements and what we need to unlock our future work program and funding and partnering for the future of this asset. And that is all going to come together very, very shortly. And I think people are going to see how well aligned everyone is, and how supportive not only the government is, but some of the strategic institutional investors, government-owned investors, are as well, along with our existing shareholders. So thank you again for your time and listening in. Please feel free to send further questions in, and look forward to providing us all with some exciting news in the very near future, and then also again getting back to activity in the field, and delivering more results and more excitement for this project, for our very large acreage portfolio, and then again with our partners. So thank you very much, and take care.